Stephen, let's start with your vision for the future of liquidity management. What do you see evolving in 2025 and beyond?
Yeah, thanks, Guillaume. So I think as we think about 2025, what we've seen in 2025, what we've seen in the past, and what we think is going to happen in the future, what our clients are looking at is they are looking how they manage through periods of uncertainty. That's what the executives are looking at. They're thinking about how they can position their organizations to be able to manage through volatile situations, but also at the same time, capitalize and have enough on hand working capital and liquidity to make sure that they can capitalize on new opportunities as they occur. So I think when we think about that, what do they do? They're looking at liquidity solutions. They're looking at being able to have visibility around their global cash position, centralizing that position. So not only can they see it, but they also have some control over it. And then they can invest it or deploy it or refund or invest it and fund it back into the business. So, we've run quite a few sort of surveys across our clients. We actually recently put out a report on treasury leadership. And we've actually found that those clients with strong treasury functions that were very forward looking actually performed incredibly well when the tariff announcements occurred recently. We found that not only with them centralizing their liquidity, were they able to generate higher yield on their surplus liquidity, but also what was more interesting is once some of that settled down, they were able to recover from those announcements, on a quicker basis. So I would say, that's what I think our clients are focusing on. I think there is a strong demand for solutions to help them to do that and to be able to manage that liquidity, centralize that liquidity, and have a good view with it. So I think that's what we're going to see as we continue to go close out 2025 and as we continue to go into 2026.
That makes a lot of sense. So when I started in Treasury 5.5 years ago, um, Treasury and the world of Treasury was in a certain state, right? I feel obviously some things have changed in 5 years. From your perspective, what are some of the most pressing challenges beyond uncertainty and volatile situations that you just broke down? What are those pressing challenges that treasurers are facing today that didn't even exist 5 years ago? How did it evolve?
Yeah, I'd say there's a couple of things. One is what our treasurers are facing today are some of the things they faced 5 years ago. And I'll touch on some of the newer things as well. But if you think about it, treasurers are there, they're having pressures to do more or with less people. So they need to be more efficient. So they've got to drive efficiencies out of their treasury model. As I said, that was probably there 5 years ago. It continues to be there today. And the reason it continues to be there today is because business models are evolving, treasuries are evolving, and therefore, those demands being placed on the treasury are evolving. So driving efficiency is important. But then I also think the other thing is to ensure that business continue to operate, through very effective fund mobilization. So they've got the money where and when they need it. Now, again, that was 5 years ago when you were in treasury. It is still there today. But when you think about what's happened over the last 5 years, we have seen a number of sort of payment mechanisms becoming much more instant, much more real time. So if you think that from a treasurer perspective, when we're thinking about business models changing as well with that over the last 5 years, things are moving more quickly. And we think of that as more real time liquidity. If you've got different flows going through your treasury systems that are more real time because of the payment flows, the nature of the clients you're dealing with, or the nature of the clients that your clients are dealing with, then the treasury functions have to be able to manage with that. So I would say one of those things that changes the speed of that evolvement and the movement of that liquidity, but also those fundamentals have changed. And so I think the way I would say it is that, if you think about this, those organizations that have evolved their treasury functions in line with their business models, or as markets have evolved, they have put themselves in a very strong place to be able to manage through their cash cycles. They have been able to manage through the different interest rate environments and manage through those environments. And what we're able to do is we operate in 90 plus markets. We have SMEs on the ground and expertise on connectivity with the regulators on the ground that can help our clients navigate that change. So that change continues. It's continued, over the last 5 years, to your question. The fundamentals still stay the same, but you have to operate in these markets. And that's how we can help our clients operate in those markets very effectively and managing their liquidity. And I suppose if you say, well, no, Stephen, how do we go about doing that? And how do you stay ahead of that to help your clients stay ahead of it? There's a couple of things here. One is we've been investing in our core platforms. Our core platforms allow our clients access to much more real-time data and information. At the same time, we've been investing in capabilities that allow our clients to move money as and when they need to move it. So let me give you an example of a product that we launched last year, which is real-time funding. I think probably 5 years ago or maybe longer, people would think about, well, we'd fund a position at the end of each day, and the Treasury function would then say that's our position squared, and we'd wait till the following day. The world's moving, as I said, much more rapidly. So what our clients want to do is they want to actually fund in real time. They have a payment going out of an account. They want to fund that as that payment has just gone out of that account and make that a little bit more programmable. So we have got solutions that allow our clients that if a payment goes out of their Hong Kong branch and they got the money in London, real time, that money gets moved across to that branch and it can fund that payment coming out, which you can see drives that efficiency than waiting and forecasting to the end of the day and then trying to square those positions. So, that's the client interest we see. And that's sort of as we build our capabilities as we think about it. So hopefully that answers the question around, what was different from 5 years ago and how we're thinking about it into the future.
100%. You've given us lots of golden nuggets in here, which I'm going to follow up on. So I like the fundamentals at the end of the day remain the same. It's just that everything is going much, much faster. So
Mm.
bearing that in mind, faster, real time, we need to cover positions faster everywhere in the world. When we look at Citi and what you do as well, Stephen, right? You are often speaking about how the lack of data can leave money on the table. To tie what you just explained to data, I can't imagine treasurers being able to do this and operate faster if they do not have the right data to make decisions on. So can you expand on what that means in practice to leave money on the table if you don't have the right data?
Yeah, it's a great question because if you think about what I've said in terms of everything moving faster, there's a lot more data for treasury functions to have to look at and have to digest. And as clients go more global, as they branch into different countries, they acquire or they grow, they will open up more bank accounts. And so what we did, we actually benchmark a lot of our clients through we've got a tool called Citi Treasury Diagnostics, which allows us to benchmark and differential what is best in class treasuries versus those that, a little bit more embryonic that are moving through that treasury journey. And we've seen that those that have got strong processes in the fundamentals, which is being able to understand where their cash is, what the accounts are that they've got, being able to pull that together, being able to centralize it, really sort of sets them apart from those that have got cash sitting in different pockets. Now, if you think about it, the comment about leaving money on the table. If you think that if you can pull your liquidity together, you can minimize the pockets of liquidity that you have across your treasury function. You can then take that in a very automated way, in a timely way, and you've got that data, you've got that visibility. You can then choose how to invest it. Now, being able to bring that together and make those decisions, that's where I made a comment earlier about those higher performing treasuries are getting a better yield as we went through the recent events in 2025 because they could see that with their data set and they could then deploy it where they were getting a higher yield. So that's why we say you can leave money on the table because you're not extracting the true value out of the cash balances that you have around your organization. So, what our Citi Treasury Diagnostics tool does is it allows us to benchmark and it allows us to then be able to help clients say, you're doing this incredibly well. You're best in class here. But what we are seeing is people being able to engineer this process a little bit better. They're being able to automate and digitalize this part of the process so they're able to then take that liquidity, being able to have the visibility of it, and therefore make better decisions on the investment strategies around it.
I like that you break down how clients in strong positions are operating right now and the benefits they are getting from it. Literally money, better yields, right? And better efficiency, obviously. So we looked back at the last 5 years, right? And lots of things are staying the same in terms of fundamentals. It's going much faster. Something that I know for a fact hasn't evolved over the last 5 years is real-time good visibility. So you've spoken about the clients in strong positions, but what about the ones that aren't yet? What is it that is preventing? What are some of the barriers that still prevent treasury teams that are not best in class yet from getting that full visibility, from getting that data set that is clean and allowing them to go further? What would you recommend to those teams?
Yeah, that is interesting as we see clients that move along that journey. And there's a couple of points there that we would recommend to them. I mean, there's generally some fragmentation, and it might be because they've acquired certain companies, and therefore they're on different systems. Their data sets are not standardized or histories or have got a history that is consistent. So when they try and then run forecasting or modeling on top of that, it's very, very, very difficult. So what we are seeing clients do is that foundation of data and taking that data set, standardizing it, bringing it into maybe a single system, and then that then gives them the visibility that gives them the advantages. So that's what we're seeing from the data foundation in terms of the treasury function. As I said earlier, the more data is being generated because liquidity is moving faster and payments are moving faster, etc.
Like that. So rationalizing as fast as possible and as efficiently as possible all the different aspects of your treasury department, especially if you're acquiring and developing, so that you can have that visibility as fast as possible and then make the right decisions.
Correct. And part of that is even account rationalization, looking at the amount of accounts you have, looking at where you have them, and looking at whether you're able to collapse some of those accounts, which means you have, less data points to be able to bring through to be able to make decisions on. So, it's a lot of sort of, dare I say, housekeeping and organization. But a lot of that is actually quite hard to do when you have multiple bank providers and you're in multiple jurisdictions and locations, which is why we feel that we're in a very good position being able to be in a lot of locations and being able to help our clients access those markets and give them a standard interface that they can use to then be able to see their liquidity in one place.
In action, I can vouch on that. Stephen, I cannot talk to the global head of liquidity management services at Citi without asking him about AI, right? So let's bring AI in here. How do you see AI playing a role in everything we've discussed so far, right? And in liquidity management specifically?
Yeah, it is. I mean, as you say, everyone is talking about AI. Everyone is thinking about how AI can help drive the way they're either serving clients or the way that they're managing their businesses today. And we're no different to that. We are looking at how we can bring AI to our clients and how we can utilize AI to bring our services to clients better. We actually did sort of a forward-looking 2030 report that we issued, which sort of tried to identify the key areas that the industry is focused on around AI, and it's got elements of AI in there. And so I would say that, if you think about what Treasury do, a lot of it can be repetitive, and therefore AI and machine learning for our clients could be and can be a new way of being able to improve and obtain a new treasury operating system. And so, these types of technologies, they will be able to run automated tasks. They'll be able to improve the accuracy. They'll be able to support better analytics, which then comes back to that decision making that I was talking about. So I would say, as we take a look at the clients that we talk to, that is one of the places where AI definitely within the treasury system can work. I think it then links back to the point around data, because you can only have AI sitting on top of very good data. So to our point around making sure the data is not fragmented, you need a good data strategy to make sure as you're thinking about your AI strategy, the two come together. Then the third point that we sort of identified through the work we did and the report that we published was the people and talent, because it is a different thought process and a different culture around embedding AI and machine learning into the treasury function, and having, a team that is able to be able to take these types of technologies and capabilities and be able to take a process today. And what's very important is the process might be able to be improved before you then apply some sort of AI machine learning. So you need to have the culture to challenge the process today, to be able to look at that process. Once that process has been re-engineered, then automate it. No point automating, what is not the best process. We also pointed out, if you think about partnerships and interoperability, knowing that a treasury function can't operate its own. It sits there enabling other parts of the organization, we see this in our clients, helping them ensure that they're delivering what they need to deliver, their services for their clients. So making sure that they're partnering, with individuals within their organization on that journey, but at the same time with their banks and talking to their banks, because some of this, the data they'll need from their banking partners. So of course, making sure that they're getting that data through is very important building block of as they move to AI. And then I think it all comes down to, well, is it redefining Treasury's role within the organization? And I would say it is a value add part of the organization, and that's what we're seeing as we think about and seeing much more higher performing treasury functions. They really are adding value. What AI is going to do is help them accelerate that. And coming back to that first question you asked me around doing more with less, AI is an enabler of that. So that's sort of as we think about how our clients are utilizing it and thinking about it. Obviously, we're thinking about it internally as to how we can help our clients with this. And I suppose the way we think about it is there a way that we can use AI to be able to allow our clients to manage liquidity in a more efficient manner? And so I suppose that's how we're thinking about it. And, we're developing certain capabilities that we hopefully will be able to help our clients optimize their liquidity as they think it through their structures.
Lots of gold here again. So whilst listening to you answer this question, Stephen, I can't help but think that tying back to the fact that everything is going faster, right? So are the new AI solutions in Treasury. And here, as you've just broken it down, there is so many areas where Treasury can do better, where Treasury needs to rethink, redefine, operate better. For a Treasury team that might not be there yet and wants to get the best out of AI in one particular aspect, the one that will yield the best results or allow them to have the best, productivity boost, what would you recommend people look into first? Is it forecasting, anomaly detection, operational automation, anything else? Like, what is that one thing that you would recommend Treasury teams go for in the first place if they want to explore AI in Treasury?
Yeah, it's a good question, trying to pin me down to a single point. But what I would say is different clients have different use cases for AI. So I would say it's not a one size fits all. I wouldn't say, I think if you went and employed it in forecasting, that is the solution. I've seen certain clients thinking about forecasting, but they're thinking about other areas as well, because very often you can't think about it in just one sort of singular area. And it might be that you have to unleash it as a chain, front to back, end to end process in order to get the benefits of it. So that's why I think depending on where you are in your journey as a treasury function, deploying that it will depend on where you are on that journey. So I wouldn't want to say to someone that is the best idea, because I think for people that are listening to us, they will say, well, actually, yeah, I can see that's a good idea for that type of company. But for the company that I'm in, I think it's this idea. That's why I think it will vary, and it's not necessarily one size fits all.
Like that. And I would agree with it. So the best thing to do is probably to have a very good and clear understanding of where your treasury function is at right now, where maybe it is a bit behind in terms of development and best practices, and look at where it would be easy to implement an AI solution that would cover a gap related to your treasury function. Is that
I would
understanding
agree,
correct?
but I think what we discussed earlier is probably the best that will come across it is the data strategy underpinning it, because that will then enable across the end to end.
That makes sense. So here, Stephen, I'd like to send you a bit of a curveball here, because I understand how obviously Citi, you're one of the first on new technologies, advancement, and how to support treasury teams, right? Globally, the way you see it with your clients, how has this constant evolution of like treasury technology and landscape, how has this changed the relationship between corporations and their banking partners overall, in your opinion?
Yeah, I think if you think about the relationship over time, well, if I take a step back and think, well, how do we
Yeah.
invest? How do we help our clients? We spend a lot of time sitting with our clients, understanding their needs, understanding what their future needs will be. And so we're very much client led in our innovation. To your point about where do we invest? How do we invest? How do we drive that forward? Obviously, we have, as I mentioned, we have the client advisory group, which goes out and sees teams. We have a big client facing team, which also goes out and brings all that information back to our product developers to make sure that we're developing products that our clients really need and will use. And I think that is, as you think about the longevity of some of our client relationships, you've seen that we step up, we deliver what our clients require. And so we will continue to innovate as we go through different cycles, as we go through different types of technology, because we want to help our clients make sure that they can fulfill their requirements through that. I've already touched on it. I mean, we are making sure that, we are investing in 24/7 real-time liquidity. The interaction between us and our clients obviously is moving a lot more to APIs and real-time connectivity, because if you think about everything we've been discussing about things moving quicker, data needs, its volume, its scale, and its in its connectivity. So making sure that we have the right connectivity with the clients. Some clients, require API connectivity. Others don't. Others can manage using, more traditional rails of connectivity. But, what we aim to do is we aim to allow our clients, as they come through their journey, as they grow and they move into multinational jurisdictions, to be able to rationalize those accounts, to be able to think about those flows, and making sure that if they're entering a market for the first time, we've got the expertise that we can help them on unlock, what they need to unlock from a treasury perspective. So we've continued to invest because, as we said, 5 years ago, things are very different from now. The fundamentals are the same, but things are moving. Things continue to move. So we continue to invest in our technology. We continue to roll out new product capabilities our clients value and utilize, because that's the environment they're managing to.
I really like your approach of it's not a one size fits all, right? You need to understand exactly what's going on in the treasury function. I'm still gonna try to get you to look into your crystal ball here, Stephen, and talk to me about. So we've looked at the, 5 years ago and like backwards. Let's look forward now, 3 to 5 years from now, assuming the Treasury Department has clean data, because I think that's the foundation, right? What tech capabilities do you think will be non-negotiable in Treasury 3 to 5 years from now? Capabilities plural, so there is not just one.
Yeah, yeah, no, I get it. 3 to 5 years. So I think two things. One is moving much more 24/7 in a real time world. Okay. Because that does two things. That does build resilience, but it allows them also to grow. And so if you think about what that really means in terms of what is non-negotiable and what they have to do, they have to think about real-time treasury, and they have to think around borderless networks. The shift towards, real time is coming. It is here for a lot of our clients, and this making sure they overcome some of the limitations around batch processing and cutoff times are very important that our clients have to work on. So it's as we look to the future, it's making sure 24/7, 365, always on across multi jurisdictions is the area that treasuries have to go to. I think there are ways of doing that. We invest in what I'll call more traditional rails, and I gave you the example earlier in real time funding. But you've also got digital assets on blockchain in terms of technology solutions. If you think about it, are just enabling that 24/7. They're allowing movement of money on a more real-time basis. And therefore, it's one of the building blocks that can be used to facilitate that longer term goal if they're making investments as to, how they're moving it to. But very often they can use their banking providers who can leverage that technology to help them get to that 24/7. I think the other thing that they need to make sure in terms of, both on the resilience and growth side is that end-to-end connectivity. The future of treasury requires, seamless end-to-end connectivity to make sure you've got those real-time insights. As I said, you can't have a block in one area, because that will then have a problem when you're looking at your cash flow forecasting from front to back, your liquidity and risk management. You need a single source of truth which the treasury function can rely on, and that will then allow them to boost that operational resilience, which is that resilience point which you asked me. And then I think the other thing is, they think about the longer term, it's legacy systems, and being able to take those legacy systems and to upgrade them. They're not easy project. They take an organization a long time to be able to take out an old treasury system that they have to put a new treasury system in. But they are, we're seeing clients looking how they can unbundle some of these legacy systems to be able to migrate away from some of their sort of central infrastructure and some of their legacy spreadsheets, and bring that into sort of API ready, which comes back to the question around, connectivity with their bank providers.
So I like that you've broken everything down, Stephen, whilst explaining how you, Citi, help treasurers and treasury teams do all this. If we purely bring it back to Citi, is there anything that we didn't touch upon on how you are actually supporting treasurers to adapt to all those changes that we've mentioned and turn potentially disruption into opportunities?
Yeah, yeah. So I think we've covered some of it, but let me just sort of run through a bit of it. So I think we think about it across two axes. One is we think about taking our existing solutions and taking them a little deeper in certain countries and broaden them out in certain jurisdictions where, they might not be as broad as they are in some of our main jurisdictions. So making it even more consistent than it is today. The other access is then how do we make that more real time? So I gave you the example of real time funding, where we effectively allow clients to be able to move their money on a real time basis. So that's one. And we launched Citi Token Services for cash last year, which, as I mentioned earlier, a blockchain, private permissioned capability that helps our clients move their money on a real time basis. And it's an internal solution. And, we're coming back to that point about it's something that our clients want to use. We are now processing, billions of dollars of transactions through that. But then, if we think about another angle to this, if I've talked about real time funding, but think about the fact that clients want to move money on a weekend. So they want to sweep money on a weekend because in some parts of the world, that country is operating, or they need to pre-position some money, or they need to make a payment. So what we've also invested in is sort of 7-day sweeps. So clients are open. So it's not only we're open throughout the day, but we're open at weekends. So we can help clients who may have an e-commerce platform that are taking payments throughout the weekend, help them to manage their liquidity on a 7-day basis. And then the last bit, which if you think about, you can move money on a real-time basis. You can then, in certain corridors where we have it available, you are able to move it at the weekends. What happens if you want to also move it across currency? So, your currency is your home-based currency, but you have liquidity in another currency. Can you sweep that into a base currency? And again, make that pre-programmed so you don't have a treasury professional having to go in and do an FX and move the money. Again, all of those are the premise of what we're helping clients do is become more flexible and but also at the same time more automated. Because as things get more complex, more automation brings back and helps with that fundamental sort of goal of what the treasury function is.
I love how this tie back to everything we discussed so far. Having a proper data gathering and cleaning, enabling speed, flexibility, and at the end of the day, 24/7. There is one thing that we didn't touch upon, Stephen, that I would like maybe to wrap this interview on, is the fact that treasury is a people business. You quickly touched upon it, right? When we were talking about what's the number one thing that we want to do, how is AI potentially changing the way people interact with treasury? Any key mindset shifts that you'd recommend for treasurers looking to future-proof their function that you could give us?
Yeah, I think as I think about it, people can feel a little bit overwhelmed. They can think there's a lot going on in this space and the pace of change is fast. I think there are two things that I would recommend for treasurers to do. One is just think about the fundamentals. The fundamentals are the key things that hold true through the period. Second is as you think about then your bank partners, you think about how to set up and benchmark yourself. And as I said earlier, we do have a tool that can do that for our clients. But then you will see where you are as a treasurer or a CFO, you are best in class, or where maybe somewhere you need to invest. But you're not then on your own with trying to make that decision and to think where it is. So I would say, you got to just take a step back and say, right, as a treasury function, what are our key goals? And then who can I partner with to make sure I achieve those goals? And as I said, I think Citi is a great place to be able to partner with to be able to achieve that.
Speaking of which, where should people go if they want to find out more about you, Stephen, personally, what Citi does in the liquidity space? Where should people go and connect with you?
Yeah, thanks very much. So I think after this, we're going to share the links. I did mention a number of our papers that we put out, sort of the Treasury 2030 paper that we put out, the Treasury leadership paper, which, I would encourage people to read and to digest because I think, yeah, hopefully a lot of what we've talked about will be covered there. They'll also, if you've got a Citi representative, please reach out to them. If not, there'll be contact details on how you can get in touch with us. And we'd love to have a conversation as you go through your treasury journey. And hopefully some of the stuff that we've spoken about today resonates and, it's giving you food for thought on how you can help your treasury function develop and move forward as we go into the next 5 years.
Well, it did for me for sure. So hopefully the audience as well. Stephen, thank you so much for coming on Corporate Treasury 101. We will put all the links in the description indeed. So if you want to check them out, go and check the links in the description. Stephen, thank you so much.
Thank you very much.